Great. Thank you again. I appreciate the opportunity to spend the next 35 minutes or so and really just kind of give you a little bit about my background and give you a strategy that I think you can use right away. Okay, so today we're going to focus in on using Heikin Ashi. Oh, I really like to use Heikin Ashi for really looking at my entries and just as important, when to exit a trade. And again, we're gonna talk about that today. So real quickly, just a little bit of background about myself if you don't know me. I've got my PhD in finance. I've been a professor and a trader since 2006. I've been kind of lucky because I've been able to really fund my account and practice and really, as we've talked about in a few presenters now, back test and buy software and do things, based off of the university's dime. Because as a professor at a college, part of your responsibilities are to do research and do data. And so again, I've been very fortunate myself, and I just like to give back to folks and really give you systems that, one, have to be profitable, obviously, but two, pretty simple, because trading does not have to be difficult. I live in North Carolina, and again, I've been trading since 2006, and what always excited me about trading was unlimited possibilities and freedom. Okay, and that's something that I always wanted for myself and my family. And I'm president of seasonaltraderpro.com, which is a company I started myself. Okay, so before we get going, again, just read this quick notice. Obviously, you shouldn't risk money you can't afford to lose. And today is for educational purposes only. So we're going to focus today on Heikin Ashi. If you've never heard of it before, I think you'll be pleasantly surprised and excited about it. If you've heard of it, I think it'll still be extremely useful and maybe help you reinvent that passion for something a little bit unique. And at the end, I will have a special offer for you all. So first and foremost, let's focus in on what is HA, which again is Heikin Ashi. Most of you will look at traditional candlesticks. I know Jake, great guy, great speaker from the last presentation. A lot of the candlesticks he was showing is actually open close bars, right? A lot of the more modern traders will use candlesticks, right, where you have the red and the green candles and so forth. And what I like to use is a Heikin Ashi. It basically gives you the average price to create open and closes. And what I like about it is, instead of using the actual open, high, low, and close like standard candlesticks, Heikin Ashi uses a modified formula based on 2-period averages. Okay, so big picture, what that means is it kind of tells you to relax a little bit. And the reason I say that is, anytime you're looking to get into a trade, right? If you look at, especially in today's environment, you can have up days, down days. If you're trading off smaller time frames, you could have a 5-minute chart, and every 5 minutes you've got up and down candles, right? Where what Heikin Ashi can come in extremely handy is it's going to keep that trend for you as long as it can. So it's going to allow you to not only get into the trade, but then stay into the trade. And I'm just going to show you some examples of that today and kind of how I've customized some things to make things a little bit easier to read. So one simple strategy, and we'll review this on some charts, okay? But one simple strategy is to plot the 20 EMA on your charts and a 50 EMA, okay? So you basically have 2 moving averages on your charts, and I'll show you all of this. And then if price is above the moving averages, okay, you're only looking for long plays, because one thing that especially newer traders will struggle with is, are we in an uptrend or a downtrend? So you have to define that. Okay, you have to understand based on rules, are you going to say it's in an uptrend or a downtrend? And then again, if price is above the moving averages, you're looking for longs, which again, price going higher. If price is below the moving averages, then vice versa, you're looking to go to the short side, okay? And then what I like to do is I like to scan for these potential change in direction, change in trend as the market's opened up, so that I can see, okay, what are some opportunities for today, based off of this Heikin Ashi formula. Okay, so what I did here, folks, on the left here, you can see this candle. And in the background, the green candle is the Heikin Ashi candle, okay? And then what I put in here, I had programmed was the white bar here is the actual price, the open, okay, of actual price. And then the red line is the actual close. So where can this be handy? So obviously in this case, if you were looking at a traditional candlestick, right, it would still be green, right, because you had an open and a close higher than an open. So even a regular price candle in this case would be green, okay? It wouldn't be nearly as thick as this. But the Heikin Ashi candle saying it not only, close higher based off the Heikin Ashi formula, but that's a pretty bullish candle because it's pretty solid, right? You've got, half or more of this candlestick as an example that is green, okay? And so as we go over a few charts here in a little while, you'll kind of get a feel for it, but it can really show you whether or not something is potentially in a strong trend and continuing in that strong trend, or if it isn't, are we getting ready for that potential reversal, okay? And then what I had programmed was dots. So once I get into the trade, so when I get into a trade for a long play is when you have a yellow dot that then turns to green, okay, that's my enter point if it's meeting the other criteria that I talked about. And then I won't exit the trade, at least not the entire lot of the trade, until I get a red dot. Okay, so again, very simple rules that we'll put all together here in just a couple minutes. But it's a good rule-based program that allows you to stay into the trade much longer than what you traditionally would, because these green Heikin Ashi dots, okay, is what these are. More than likely, some of these particular days, let's say this is a daily chart, so each dot is a day's worth, okay? If you were to look at the actual chart, you're probably going to see that there were some days that price actually closed lower, yet Heikin Ashi was still green, okay? And that's what it can really be useful for you to stay into some of these trades, because I always get traders say, Dr. Keith, it was great. I got into this trade. I made 10% and then I got out. I didn't want to get greedy. And my thought process is you should always look to be greedy. Take as much of a trade as you can get following rules, because when it goes against you, right, there's no mercy out there. So again, you don't have to sit there and roll at night, and in my opinion, and think about, should I get out of this trade or not? What I'm showing you in this simple system is easy rules to follow. All you have to do is follow them, which let's face it, can be difficult for many people. And then again, I told you I have then a scan. This is with Thinkorswim. That's my platform I use most of the time, okay? Where I run a scan, and if we're doing stocks, okay, this is for all three markets, but let's assume right now we're doing stocks. Okay, what I'm looking for is the yellow to green. So when it goes from a yellow dot, which is a potential reversal, to a green, okay, these are going to give me in the scan the potential opportunities that have that trend change. Okay, and again, I'm going to put this all together here in just a couple minutes, but those are basically the tools that I'm using in this Heikin Ashi system. Okay, so let's take a look at some charts here. Just bear with me here. Okay. Okay, so you can see my Thinkorswim platform here. And as I mentioned, let's just kind of go over real basic, because again, my main goal here today, folks, is to show you that you can have a good solid trading system. You don't have to have 1,000 indicators, okay? So this white is the 20 period, okay? It's a little bit thinner, as you can see on my charts, than the orange, right? The orange is the 50 period. So basically, if the white is above the orange and it's trending up in this case, right, I'm only looking for long plays, okay? And we'll show some longs and some shorts. And then what I can show you here, let me just blow it up to kind of show you. So this is the Heikin Ashi candle in the background, okay? And let me clarify again, I didn't develop the Heikin Ashi candle, okay? What I did was I programmed then actual price open and close within that Heikin Ashi, okay? Because Thinkorswim actually has Heikin Ashi candles, okay? It's really cool. But I have always liked to know, well, what did actual price do, okay? And that can be extremely important as you're looking at things. So here's an example. Let's just take a look at this. Let me blow it up one more time to show you. So here's an example where the price opened up here, actual price, and then closed here. okay? So if you were looking at a traditional candlestick, it would be a red, okay? But because Heikin Ashi is basically saying at this point, okay, just relax, okay, we have a potential reversal, we're not sure yet, that's why it's green, okay? So this is the Heikin Ashi candle that has then the actual open and then the close of price for us, right? Again, very, very useful in your analysis. But anyway, so when you're looking at something like Broadcom, okay, I just put this up here because it was trending very, very nicely here, right? You can see here the white has been above the orange, so we're only looking for long play. So when do we look for these? So we look when we get these type of pullbacks, okay? This is where I know most of you struggle because I did for years. When is the time to get in, okay? And as you know, nothing's perfect. But what I can tell you with high probability, when you're going in the direction, back into the direction of the trend, okay, so during this move down, I was just, sitting on my hands, and then you see this yellow dot. Okay, this is the yellow Heikin Ashi dot I created that just says, okay, we have our first green Heikin Ashi. It's a potential reversal, okay? So aggressive traders will go in at the yellow. I like to wait to get that second green candle confirmation, okay, which is right here on November 3rd in this example, okay? So that would be my re-enter point, okay? So you get in here, and when do you exit, okay? There's one of two ways, right? You must have a plan whether it works out or not. So when would I exit this trade? If it went against me, I would get out when I got a red dot, okay? So in this case, it worked out really nicely. Again, I wanted to show this as an example. When things work out nicely, you get in on 11.3. The real question is, when do you exit, right? So again, you just go down here on the bottom and you just kind of keep an eye on the dots, right? You can see here, the exit date was on 12/11. So actual price, you see this red line, close at roughly 405.48, okay? And the enter point was roughly 353. But during this red candle here, for example, Heikin Ashi was saying there's indecision, but there's no reason to exit yet. And this is what I wanted to show you, that you may have already taken partial profits. I'm not saying keep a full position out there, but you need to keep in the trade until you have an indication that's saying we have a potential trend change, okay? And then so in this case, we got the red dot, so we exited. But in all honesty, 2 days later, we get another green dot in the direction of that trend, right? The moving averages are actually widening, which is a really bullish opportunity. So you can get right back in right here, and then you can continue up, okay? And if you got in there, again, you exit right here on 1.5 for, again, another nice profit. So again, this is just something that I mean, it's a great way to trade, folks, to really stay into those trends. So let's grab something else. So here's ENDP, okay, Endo International. Again, just brought it through a few out here to show you where when you have the white that's staying above the orange, okay, you're just looking for those entry points, okay? So, in this case, you got right here a yellow to a green. This could have been an entry, and then you exit a few days later on this red bar, okay? And again, you're making the meat of the trade. Typically what I have found is when you're entering, in the direction of the trend using Heikin Ashi, you're going to get about 80% of that potential move. And think about that. If it wasn't for that type of system, usually traders are going to get out early or hold on to their losses longer, okay? And that's really what you don't want to do, okay, is hold on to your losses longer. You want to have smaller losses and larger wins, okay, which again, sounds super simple, but in the real world, it isn't. So here's an example of Kellogg's in a downtrend, okay? So again, you can see the moving average, right? So now the white is below the orange. So we're looking for short trades, right? And so here's a great example where you have the retracement, okay, even though price, went above this, the moving averages are still down. So then when we got that red Heikin Ashi on 11.19, okay, that's another phenomenal entry, okay, opportunity, and in this case, you just stay in again, look at the dots down here on the bottom until you get a green dot in this case, right? So right here, okay, so you can see the bar close, the red line right here is the close of actual price. Okay, you can see you made this nice profit, okay? And so this is how you can ride trends, folks, is really, using Heikin Ashi in the direction of that trend. And, really, I created this because I've had a lot of my folks that I mentor say, you know, Dr. Keith, I still struggle on when to exit the trade. I don't want to exit early. I really want to take advantage of the market when I can. And that's when I have just found for years Heikin Ashi being highly effective. What I didn't like about it in the past, before programming was available and so forth, is I always had to switch back and forth to see what actual price did. But again, now I have the lines. The white is the actual open, and the red is the actual close. Okay. So let's look at the SPY. Okay. I know a lot of you like to trade the indexes and so forth. So interesting enough. Okay. You can see here we got a yellow dot today, right? Because you have your first green Heikin Ashi to the upside, okay, in this nice uptrend, right? So this is an example again where, are you looking to go long? Now might be the time. My only caution is I personally don't like to go in that close to highs, okay? I like to see more room to make money, because typically when you start hitting new highs, you are going to have retracements that happen right here, okay? But generally speaking, this is if it opens up with a green dot tomorrow morning, it's a good potential entry on the spider. Remember, this is cotton, okay? This is a futures market. Just want to show some different types of examples. So again, my point is massive trend. So when do you enter? You get that, consolidation, you get the yellow with a potential reversal, and then you get your green dot, okay? And then you get in, you don't know how long you're going to be able to stay into the move, right? So you just you play it. And one thing that I want to kind of emphasize as well, you can look at the dots to when you get out, right? So you get out on this red dot right here, okay? But also what's very telling, okay, as I blow this up, when you have solid candlesticks, just like traditional candlesticks, okay, look at these bullish candles, okay? There's really no reason to, at this point, to think I need to exit, right? Because you don't know how far that trend's going to go, but you do know that historically you're going to make about 80% of that potential move. You just don't know when that move's going to end, right? Looking at live charts, okay? RAD's another one, right? Recently here, where you have the nice pullback back into the moving averages, and then the scan that I have, which I'll show you in a minute, on 1.7 says, okay, yellow to green 1.7, here's your entry, okay? And if you got into this trade, obviously you can just keep staying into the trade. And as these widen, okay, you need to say there's no reason for me to exit yet, right? And then as of today was the exit point, okay? Now again, when you have a price action wick like this at a new high, okay, that's probably an indication that's a short-term top. But even if you're just following the rules, okay, you exited today at the close, okay, you still made a nice profit from, let's say you got in here at $17 and you exited here at $22.30. Okay, there have been other ways to manage that, but you get my point from big picture. Okay. Okay, so let me bring up another example here. Again, just to kind of show you. So here you got the moving averages widening. Okay, so back here I wouldn't have been excited about any sort of trade because the moving averages are just on top of each other. But now you got it widening. Okay. So what I'm looking for at this point is when I get a yellow or a red and then back to a green, okay, this would be my entry right here, okay? And again, so if you're in this trade, you wouldn't be out yet, okay? You might have took part of your position. I typically take half of my position off, when I'm trading options at about a 50% profit, and then I hang on until I get a red dot, okay? But you can see here, this is just showing you that we don't know if this is the top at 124 or not, okay? This Heikin Ashi is kind of an indecision. So you may say, you know what, I want to preserve all my money I made in this trade and exit. Or you can say, you know what, this could just consolidate. We don't have a red dot yet until, maybe it's going to go up to, 138, 140. We don't know at this point, right? Only time's going to tell on that, okay? Okay, so what I done, I created a scan that's going to be a yellow to green or a yellow to red, okay? Whether you're looking for longs or you're looking for shorts. And when I go to the scan tab, okay, I just hit scan here, and we'll see it's after hours. But so let me just give you a couple examples. So here's Adobe, okay, and this is the yellow to green, okay? So I'm just going to click on this and show the chart. And you can see here, it went from yellow to green, okay? right here, yellow to green. Now, this isn't meeting my rules to go long because the orange, the white is below the orange, okay? So I'm just gonna go to the next one, okay? So again, I have specific rules. Does that mean Adobe's not gonna go higher? No, it could easily hit those new highs, but there's better opportunities out there, okay? You gotta follow rules. So let me just pick the next one. Okay, so here's a little bit better in my opinion. Does that make sense, folks? So ADI, Analog Devices Incorporated. We had the retracement, okay? And now we're just waiting. I love it when it comes down and kiss that 50-period average, right? Then we got a yellow dot, and here is our entry today, okay? So obviously nothing's guaranteed in trading, but would this probably come up and test that 162? Well, we're gonna let Heikin Ashi tell us. And if this reverses back, okay, I'll get out 2 bars later if we get a red dot, okay? Minimize your losses, okay? Minimize your losses, but yet let the runners run, okay? So for example, if you would have did that back here on December 11th, okay, you had the red dot, then you got the yellow, right? And then here's your entry on 12/15, right? When would you have exited that trade? Keep going, right? Keep going, keep going, keep going, right here on 122. Okay, so see how that lets you grab more of the trade, telling you to relax, right? Because again, if I show you traditional candles, remember this would be a red candle here. It opened here and closed here. Okay, Heikin Ashi is saying, you know, but relax. Okay, we're still green. We're still on an average of a Heikin Ashi formula. We're still going higher. Okay, so it'll help you stay in the trade longer to maximize some of those profits, okay? Let me bring up something down here. Let me grab something like DDD, all right? I'm just gonna take a look at that one. And this scan updates, you know, every day. You know, so again, you had it, the white, you know, above the orange, you're looking for long plays. When is a potential re-enter? You know, if you got out because of the red dot green, you know, 1.6 is the entry, okay? Of course, you don't know it's gonna make this type of move, but there's no red dot yet, right? And if you didn't get in this trade, right, remember this was a yellow to green scan, right? So now it's saying this is a potential entry right now, okay? Again, my personal style, I don't like to get in that close to highs, okay? I'd like to see price lower, but it's showing you and giving you that opportunity to make that decision, okay? Let's look at one more, John Deere. Okay. So again, we had the retracement on John Deere, the yellow dot, and then we have the go today. Okay, and it closed up, but again, in my opinion, it's riskier just because you're so close to high. Okay, does it mean it can't make a new high? Of course, it can make a new high, but you're going to see as you go through some of these, you know, you might find something you like better. Okay, that's why let me see if I can find another one that will maybe give you a potential entry. So Etsy's about the same. And you can create a watch list with this, folks. So I'm just going through these individually, but you can save it as a watch list and go through them much faster each day. Okay. So here's an example where on FISV again, right, the moving averages are, I'm only looking for shorts. Okay, so I'm going to ignore that long trigger because it's not meeting my rules. Okay, so and we could do a scan as well from yellow to red, and it would give you a list of the shorts each morning as well. Okay, and I like to go through each of these, and from there, pick the ones that make the most sense. Disney is one, for example. Let's take a look at Disney. Again, if you're looking to re-enter Disney and maybe hold it longer, as a dividend stock and so forth, right? This is your new entry right here based off of the rules. It had the retracement, and now it's heading back up. Okay, so again, you've got your 50 period moving average, 20 period. Okay, you've got Heikin Ashi candles. And again, those are standard in Thinkorswim. I've just created the actual open and close of actual price in here as well. Okay, I find that extremely useful because this is telling you that price in this particular instance went up, but Heikin Ashi is saying that's an extremely bullish candle, so we should continue heading higher, as we did. Okay, so again, if you know how to read candlesticks, that can tell you a lot. Just like this new entry today, that's a bullish candle, folks. Heikin Ashi candle. That price should head, higher. Not every day, may go down before it goes higher, right? But as long as it stays green now, you can continue to try to maximize those profits. Okay. Okay, let me bring up my slides again. Oh, let me grab it. Sorry, it took me all the way to the beginning. Hit the wrong button. Okay. So one of the offers that I have here over the next three days, basically what you can get is you can get the Heikin Ashi that's got the dots at the bottom of the screen that you saw, right? And then the lines within the actual price, so that when you open your Heikin Ashi candle, you can also see your open and your close. Okay, that's very, very important. And then the scan, right? The scan's going to be for yellow to green and for yellow to red. Okay, so that way, whether you're looking for longs or shorts, you'll be able to look for both of those. Okay, and then what I'm throwing in as a special here for this great audience is also a 30-minute mentoring where I can not only help you set it up in Thinkorswim. Okay, this is for Thinkorswim, but also then give you the strategies or just be there for 30 minutes for any other questions that you might have. Okay, so again, I'm giving a really nice discount for tonight's event. If you're interested, he's put that in the chat for you all, and I appreciate that. Okay, so I wanted to get that out there. But what I'd also like to do, because I know a lot of you like shorter term trading. Okay, so let me go back to my charts here, and let's say you like to trade Netflix. Okay. How can you use Heikin Ashi with Netflix? Okay, you can change that to any time frame, but let's say you're looking at a smaller time frame where 30-minute charts. Okay, so again, how do you do that? Same philosophy, just shorter times, right? So as long as the white is above the yellow, you got your retracement, you got your yellow dot right here, your green is your entry. Okay, when do you exit? At least the entire trade right here and right here. Okay, so this works, folks, on all time frames. For my lifestyle, I prefer the larger time frames. Daily, I'll do 4 hours at times. Okay, so for example, if you were to go to a 4-hour chart, here when you have these moving averages on top like this, on top of each other, you just go to something else. Okay, so let's pick something else like AMAT. Okay, so back here, you're day trading AMT, here's a potential re-entry. You have your 2 red dots, right, and then your yellow, and then your green right here. Okay, so this is your potential entry point. I love how the moving averages are widening. Okay, and when do you exit? Well, in this case, you actually would exit right here on that red dot. Okay, but then you could get in 3 bars later and continue following up that trend. Okay, so again, I think it's extremely useful on smaller time frames as well. There's definitely 5-minute charts, tick charts. I just, for my lifestyle, most of my trades I do are off of the daily, or if I'm going to day trade for a couple hours in the day, I'm using the 5-minute chart. Okay, 5-minute chart. So once it started widening, this is a new entry. After the yellow back to green, this is a new entry right here. Okay, so very simple rules that you can have written down. It allows you then to go back and test it out. And again, I have found it extremely useful. My background is high probability trades, but easy to understand. You don't need a bunch of indicators, folks, to make it work. Okay, you've got your scans. You can run your scans every day. Look at those opportunities. Ignore the ones that don't match your criteria with some high probability ones. Okay. All right, well, I wanted to leave a few minutes here for any questions that you might have, or if there's something you wanted to look at on a chart, feel free to type it in. I know it's a little risky at times using live charts, but I really like to demonstrate this using live charts, so hopefully you enjoyed that presentation. Any questions? The other thing too, while I'm waiting, if you, let me bring up my slides one more time. Bear with me. Okay, so if I go to the next slide, one thing I recommend is this weekly webinar. Oop, I hit the button here, 1 second. This weekly webinar link, and it'll be on the recording. Sorry, I keep hitting the wrong button. But I do every Wednesday at 1 o'clock Eastern, I do a live webinar where I go over market analysis and stuff, no charge. You also see it on my YouTube channel here. And I do record it in case you can't make it during the day. Okay, but again, free resources for you to get some ideas. I use my indicators. You can get used to it. You can always go on my YouTube channel as well and kind of check out some of my past webinars as well, and reach out if you have any questions.